Hi, sorry about the wait, folks. I was just in my boss's office talking about the sales I've approved this week. So, Maria, you guys told me you settled on a house?
The house is perfect. We're so excited.
I still think it's on the pricey side of what we can afford.
Not to worry, Mr. Fieldman. I'm sure we can make the finances work. You're starting a family. You shouldn't have to settle for a house you don't want.
Well, look, we have some special circumstances. I got out of jail 2 years ago, but I've been holding a steady job since. Janet works too, part-time, but we have very little savings and no credit to speak of.
Well, Mr. Fieldman, you've come to the right person. You should see the other loans I've approved this week. As Maria probably told you, more than half of our loans are no money down.
So no down payment at all?
You heard me right, no money down. Now, I've already reviewed your case and I'm comfortable with going with a variable rate mortgage. What a nice young family. I'm so glad we could get them approved. What's wrong, baby?
I don't know how you do it. The couple's credit was non-existent, and you don't even ask for proof of income before giving them the loan. Aren't you worried that they might not be able to pay you back?
I trust my customers. And besides, you know we don't hold these mortgages, right?
What do you mean?
It's not like years ago where you make a loan and expect to be paid back over 30 years. We take our mortgages and we turn around and sell them.
Sell them who?
Fannie Mae, an investment bank, who knows? Look, the point is, we don't hold on to the loans. Look, don't worry about it, baby. I didn't get promoted for not knowing what I'm doing. What do you say we go get a drink before heading home?
All right, baby. Let's go get some dinner.
How can I help you, Allison?
I read over your report. John, we've worked together for 3 years now. You're a good employee, but this won't do.
What do you mean?
Most of the mortgages which go into these securities are so-called subprime loans, often given to borrowers with poor or no credit. Often, these loans are offered with no money down and an attractive initial interest rate that could rise if there's a correction in the housing market. John, these are AA and AAA rated securities. How am I supposed to explain a report like this to our investors?
We've been over this before, Allison. It's my position that these ratings are meaningless. The rating agencies don't understand what they're dealing with here. These loans are risky.
Housing has gone nowhere but up for the last 5 years. Interest rates are at historic lows, and here you are talking about a correction.
The recent growth is all the more reason to be cautious.
Look, John, I'm not approving this report.
What do you mean?
Exactly what I said. This report is not leaving my office.
But I'm chief auditor. I'm expected to give this report every year.
Well, you're not the chief auditor anymore.
You're demoting me?
Consider it a temporary reassignment until you can see eye to eye with the bank on this and other issues.
What if I go to the Fed? I'm sure they'd be very interested in having a look at these positions.
Say something like that again, John, and you're fired.
Tim?
Greg, I need you to get down to Bear.
Bear Stearns? It's the middle of the night. Tim, I thought...
The buyer's got cold feet, Greg. The deal is off. Bear's going down. I need you here ASAP.
Alright, see you in the morning. Alright, Greg, good news. We might have a new buyer.
Who's that?
J.P. Morgan. We let Bear file for bankruptcy in an orderly manner, guarantee the loan with our own money, and Morgan will pick it up.
But I thought that was illegal. We can't loan to Bear directly.
We do it through their clearing houses.
That's pretty sketchy, but look, we've got a bigger problem. Bear can't declare bankruptcy.
Why is that?
AIG.
The insurance firm? What do they have to do with it?
Credit default swaps. To the tune of $200 billion. If Bear goes belly up, AIG is on the hook for way more than they can pay.
It's not just AIG either.
That's right. Morgan Stanley and Citigroup both have a stake in Bear as well. They've lent billions. And they've borrowed money from other banks in order to make those loans.
This is so much worse than we expected. How did we not see this coming?
Who are you calling?
Ben, of course. I hope he's an early riser.